Millions of Americans are battling with a tax debt that just keeps growing. Are you one of them? Today we're diving into the 5 ways you can fight the IRS when your tax debt is too big to pay. So, if you're feeling the weight of the IRS pressure like never before, stick around to the end of the video, okay? Now let's get into the video. What's up, team? Welcome back to another episode of the Tax Huddle, where I'll be sharing some financial winning plays to help you beat Uncle Sam on the financial field. Now, in today's episode, I'm diving right into the 5 ways you can fight the IRS when your tax debt is too big to pay. So let's huddle up and break it down. But before we break the huddle, make sure you hit that like button, subscribe to the channel, comment below, and most importantly, pass this video on to your friends, family, and anyone you know who's looking to level up their financial game in 2024. Now, let's break the huddle and dive into 5 ways you can fight your IRS tax debt. Ready? Break. All right, let's talk about the IRS for a second. The team who collects the taxes. They're like big players in the debt collection game. They've got some serious tools in their toolbox. I mean, think about it. Even those private debt collection agencies out there wish they had what the IRS had. But here's the cool part. Unlike those sketchy debt collectors you might hear about, the IRS has to play by the rules. They don't just do whatever they want. And believe it or not, the IRS's main goal is not to make your life a living hell. Actually, it's just to really collect the debt that they're owed. So here's the deal. If you follow the steps and strategies the IRS lays out for you, you can actually get a handle of your tax debt and get the IRS off your back. But how do you do that? Well, that's what I'm going to break down for you today. So stay with us because we're going to dive into the secrets on how to actually tackle your tax debt. All right, team. Now it's time to explore the 4 powerful alternatives the IRS offers when your tax debt feels like it's just a big mountain that you have to climb. So let's dive right in. If your tax bill has you feeling like you're drowning, there's a lifeline called the Offer in Compromise, or OIC. So here's the deal. If you can't pay your full tax liability, or if it would create, an unbearable hardship, the IRS might let you actually reduce that big bill. So here's how it works. You figure out an amount you can manage to pay using a special IRS formula that takes into account your income and assets. Then you submit this offer to the IRS. And if they give you the green light, you get up to 24 months to pay off that reduced amount, wiping your debt slate clean. Now, if you owe less than $50,000 in taxes, penalties, and interest combined, here's another option, the installment agreement. With an installment agreement, you get a generous 72 months of extra time to pay off your tax debt. And the best part, you can request this online through the IRS website, making it simpler than ever. Ever felt like those petty penalties the IRS tackled on your bill were just unfair? Well, here's some good news. You can use the abatement of penalty strategy to wipe those out, along with those taxes that you owe. There are several grounds for making this claim, such as undue economic hardships, the loss of property due to natural disasters, or even a recent family loss. Plus, there's a first-time abate for those who've had a good history of compliance. Now let's talk about innocent spouse relief. Normally, when you file taxes jointly with your spouse, you both share equal responsibility for paying those taxes. But what if your spouse or ex-spouse made some questionable tax moves? This is where the innocent spouse relief comes in. It can shift a lot, if not all, of the tax liability onto your misbehaving partner's shoulders. Now, imagine this. Your spouse runs a business. You're not involved in it at all, and they report income and losses incorrectly. This is where the innocent spouse relief can be your lifeline. So there you have it, team. 4 IRS-approved strategies to tackle your overwhelming tax debt. But wait. We're just getting started. Stay tuned because we're about to dive a little bit deeper into these options, helping you make the best choice for your current situation. All right, team, we've explored the IRS options, but there's one more big player in the game, and that is bankruptcy. Now, before you start thinking bankruptcy is a quick fix, there's some things you got to think about. Bankruptcy is not a walk in the park. It comes with its own set of challenges and can leave a lasting mark on your credit, which could potentially last a whole decade. But here's the silver lining. In the right circumstances, bankruptcy can be a game changer, especially when it comes to wiping out some certain income tax debts, including penalties and interest. Now let's talk about the rules of the bankruptcy game. To get that tax debt off your shoulders, you've got to follow these 3 main rules, no exception. First up, your tax debts must have some gray hairs. You've got to wait at least 3 years after the filing deadline for the tax years in question. And normally, that's April 15th for the calendar year. So let's say you decide to file your bankruptcy petition on April 15th of 2024. That means you can discharge tax debts from as far back as 2021 and earlier. But here's the twist. If you got an extension in 2021, your filing deadline gets pushed to October 15th. So in that case, you need to wait until October 15th to file your bankruptcy petition for 2021 tax debts to qualify. Now, rule number 2, you've got to be squared away with the IRS on all your tax returns. That means you must wait at least 2 years after filing your tax return before you even think about filing for bankruptcy. But what if you miss filing a return for a year? Well, to get that debt discharged, you've got to go back and file that missing return as soon as possible. Then patiently wait 2 years before considering bankruptcy. And finally, rule number 3, you've got to give the IRS some breathing room. Wait at least 240 days after the IRS assesses your taxes before you even think about filing a bankruptcy petition. Timing is everything. To make sure bankruptcy can really work its magic on your tax debts, you've got to meet all 3 of these rules. So that's pretty much the bankruptcy option in a nutshell. It's not for everyone, and it's certainly not a decision you want to take lightly, but when the stars align, it can be a powerful tool to wipe out those nagging tax debts. All right, team, let's wrap this all up, and let me leave you with some key takeaways. If you're facing a tax debt that just keeps growing, don't lose hope. You're not alone, and there's some options out there to help you get out from underneath that heavy burden. Now, the IRS offers you a lifeline with some pretty effective relief methods, and these options can be a game changer depending on your specific circumstance. So here's a quick recap of the 4 major avenues of IRS relief. Number 1, offer and compromise. This can significantly reduce your tax burden and give you the time you need to pay it off. Number 2 is installment agreement. It provides you with the extra time, up to 72 months, to settle your tax debt. Number 3, abatement of penalties. You might be able to wipe out those extra penalties depending on your situation, like undue economic hardships, among other things. Number 4, innocent spouse relief. If your spouse or ex-spouse is the reason for your tax problems, this option can be able to free you from that liability. But if after exploring all these IRS avenues and you find that none of them quite fit your situation, don't trip. There's one more major player on the field, and it's bankruptcy. It's a complex game, but with the right circumstances, it can permanently wipe out certain income tax debts, including penalties and interest. Now here's the catch. To make bankruptcy work for you, you've got to follow those 3 rules we discussed earlier. Make sure you filed all your tax returns, and then wait for the right time to file that bankruptcy petition. So team, remember, there's hope, and there are options, and there are ways out there to tackle your tax debt nightmares. It's time to take action. Explore those IRS avenues, and if you're still unsure, consider consulting a bankruptcy advisor to see if that's the right path for you. So stay informed, stay proactive, and remember, you've got the tools to take control of your financial future. If you enjoy these tips and want to see some more financial winning plays, make sure you hit that like button, subscribe to the Tax Huddle, and pass this video on to your friends, your family, and fellow financial players. Until our next huddle, I'm your coach, Ibrahim Muhammad. Take care.